I'm very pleased to welcome back to the show Eric Coffin. You know him as the main man at HRA Advisory, Hard Rock Advisory. Eric, thanks for taking the time. Glad to have you with me.
Thanks for having me on, Michael.
Let's talk quickly about the environment you find yourself in now. I mean, it's impacting every aspect of the investment markets, and I'm talking about the change in the presidency and the administration and policies that are emanating out of the states. What's your sort of first blush on that?
You've seen a really marked change in market sentiment, particularly in the U.S. I mean, the level of optimism has, it's exploded ever since this guy was elected. What I'm finding interesting, and I really don't know how this is going to play out, I have my suspicions, but if you look at, I guess, sentiment, what I would call sentiment-based indicators, that's things like PMI surveys, a lot of the employment surveys, and certainly confidence surveys, they've gone up very quickly. They're indicating a growth surge. On the other hand, if you look at actual hard number economic indicators, the kind of things that get worked into, say, the GDP now estimate that the Atlanta Fed puts out, they're going the other way. I mean, it's showing estimated Q1 growth in the U.S. of 1.2% right now. The market's pricing in about 4%. That's a pretty big gap that's going to have to get filled one way or the other. I suspect it's going to come from guys on Wall Street getting a little disappointed if things don't move quite as fast as everyone hopes. But it's too early to tell still.
But it's interesting. I mean, I agree that the euphoria, let's call it that, that's really been greeted since November 9th, in the markets as we came into the new year. It was the second biggest advance post-election. I think it was since 1952 was the biggest. But then that momentum, after a few weeks settling down, has really renewed itself. Obviously, we know where the Dow is, that kind of stuff. But it's really been pricing in, like Mr. Trump has been saying, we're going to get a new tax agenda. But my goodness, we don't know the details, and yet the market's pricing in some awfully good news coming out of that.
Yeah, I'm highly suspicious of the level of optimism because the political realities in any democracy, and the U.S. is no different, notwithstanding the fact that the Republicans have the House and the Senate. It's not like you can call that party a united force. There's some pretty big wings in the party that do not agree with what Trump wants to do. There are a lot of fiscal conservatives, after all, and the stuff he's talking about is freaking those guys out. I'm not sure they're just going to roll over and say, sure, start running $1 trillion deficits, Donald, do what you want. I don't think it's going to be that simple. I think the market's being too optimistic.
Yeah, well, I think your point's also a very good one, that it's not, a unified party behind him. He was a complete outsider in the Republican Party. He certainly denigrated the Republican establishment. So, and obviously his attacks on John McCain would be an example, or Ted Cruz. I mean, he was a new guy coming in from the outside. But the other one that I'm reading continues to be contentious within the White House policymakers themselves is all this tough talk on trade. Because I'll tell you, if it is a protectionist agenda that comes forward, I mean, it's going to be, I think, derail what the market's saying right now.
Oh, if he actually does some of the things he's threatening to do, it's insane that we're all sitting here reading the President of the United States tweets to find out what's going to happen. That's pretty scary in and of itself to me. But if he actually does what he's talking about, he will derail the U.S. economy. I mean, you'd be very hard pressed to find any historical instance where an economy going highly protectionist ended well. It just never does.
And I think that's what's going on inside the White House, I would guess. You've got people who understand that very clearly. And then, another side who's sort of pushing that sort of nationalist agenda there. So that's a real risk, I think, in the marketplace. Let me just throw one more at you. What's your thought about inflation at this point? Because it seems that the bond market, at least, is saying we're going to see more inflation.
Well, and again, if you look at what he's talking about doing, one of the side effects of a protectionist agenda, pretty much by definition, is going to be higher inflation in the U.S. I mean, if he's going to start, dropping tariffs all over the place and effectively upping the price of everything, you'll see a big run. I've found that this dichotomy quite interesting. I mean, everybody's, if you look at markets like the gold market, everyone's freaking out because the Fed's going to, they will raise rates next week. That's pretty much a done deal. They may do it a couple more times this year. But what I always watch, it's not nominal interest rates, it's real interest rates that matter. for things like commodities. And actually, if you look at the long end of the curve, the 10-year real interest rate went negative last month. It's the first time that's happened in 3 years. And the reason for that it's not because bond yields are dropping like a stone. It's because inflation's been rising quickly. The one potential fly in the ointment for a faster inflation move is oil. I mean, I'm highly suspicious of the run-up in oil late last year because I'm highly suspicious of OPEC agreements. They tend to fall apart. But even given that, inflation is starting to broaden. When he was first elected, an editorial I wrote a couple of weeks later referred to him as the inflation president. That's what I think he's going to be, and that's not a bad thing if you're somebody that tracks commodities, because obviously inflationary periods tend to be highly positive for them.
Let me go further into that and talk about gold with you for a second. So that's sort of, you've given us an overlay of what you're looking at right now. How do you think it's impacting the gold market? What are you looking for as we go forward?
Well, you've seen a sell-off, in the last 3 or 4 weeks. There's been about a $100 haircut in the gold price. That's obviously impacted everything in the sector. If we follow the playbook that we saw during the last two, the only 2 Fed rate increases in the last 8 years, you saw a sell the rumor, buy the news situation. I suspect we're going to see the same thing. I think we'll probably see gold prices move up once the Fed does what everybody knows it's going to do next week. And again, you've got to watch real interest rates. The other part of this equation that's interesting is because of the expected rate increases, you've got 2 really, really crowded trades out there. One of them is a long dollar. The other one is short euro. The short euro speculative interest is the highest it's been in history, which I find a little bit strange. It's no secret the ECB is going to be a little bit more dovish than the Fed. But if you actually look at the European economy, if you look at the numbers they've been putting up for the last 3 months, this widening gap in growth, especially if you believe things like the Fed now estimate for Q1 growth in the U.S., there is no gap. I think the market's going to be wrong about that, and you could see the dollar, even with the Fed being more hawkish. I think people are going to be surprised by what the U.S. dollar does in the next few months. I think it's going down, not up, and that's good for the gold price.
Yeah. Well, currencies play such a huge part, as you say, that gold is measured in U.S. dollar terms. At least that's how we quote it, in North America, throughout the world. That's how it's traded. So, yeah, where the dollar goes obviously plays a huge part. I'd said on this show quite a while ago, I can get the notes when, but I felt that the gold market had bottomed in Canadian dollar terms. That was easier. Do the currencies help determine for you where you think the best mining opportunities are? Like somebody if you're in a weakened currency, obviously that helps your cost structure, and also, in that way. Do you also look at those kind of issues?
Yeah, because it does have an impact, because there's not much doubt that, if you're mining in Canada, what's happened with the U.S., with the Canadian dollar in the last 3 years has been it was a godsend for them, really. When gold prices were still dropping, companies that had domestic production, it really helped them hold things together, and it's helping them right now generate even higher profits. So if you can get that double whammy of a good production story in a place that has a falling currency, so that local input prices are dropping, I mean, that's a great combination to have. And I think you see that in the activities of the sector. There's no doubt there's been huge interest in Canadian exploration and development stories, and that majors have put a lot of money into Canada, and I think the currency situation is a big part of that. Well, plus obviously we've got political stability, and Canada is not an anti-mining country. Those are also pretty big things.
Yeah, I was going to say the political stability plays a part, because I can think of lots of countries, a la the currency thing, especially in the emerging markets, that are certainly in trouble, but I'm not so sure about the political stability. But by the way, I would think Mexico would be attractive. I mean, their currency's just taken a huge dive. I know some silver and some gold down there that must be happy at least with that.
No, it's definitely helped. I mean, if you look at the MD&As from companies like First Majestic, that's essentially all of their production is in Mexico. The silver price hasn't exactly done spectacularly, but the increased base metal prices plus the drop in the peso it's helped them a lot, because they have a lot of local input costs, and that goes for everybody there. Mexico is one of those places I think is very attractive geologically, but it's also attractive because their currency's gotten creamed. That just makes it more attractive.
I'm talking with Eric Coffin. He's the founder of the Hard Rock Advisory. You can find more at hraadvisory.com, www.hraadvisory.com. Hey, plus, I'm sure Eric better be sitting down for this. I've got a Money Talks, my people have been talking to his people about giving an introduction to HRA subscription. And we're talking about it's a 3-month subscription, but it only costs you $7. That's about 90% off the regular cost. But you have to go to moneytalks.net for that, by the way, and look for the Eric special offer. It's right there on the homepage. You can't miss it. But www.moneytalks.net. And for $7, you can get 90 days of HRA advisory. And you can get, as I say, want any more information, go to hraadvisory.com, Hard Rock Advisory. I'll take a break. I'll come back. I'm going to ask Eric about some specific companies he's got his eye on right now, right here on the Money Talks Network. Well, at least there'll be 2 Western Canadian NHL teams in the playoffs, the way Calgary's playing, and Edmonton Oilers had a good season. Not so much in Vancouver, but we're happy in Alberta. Hey, you didn't miss what I was saying earlier. I didn't make a mistake. For only $7, you can get a 3-month subscription to Hard Rock Advisory. Just go to moneytalks.net. Right there, you can see the special offer right in the homepage. Take advantage of it. Eric Coffin is the founder of Hard Rock Advisory. He's on the line with me right now. Eric, let's get specific on some of the things that you're looking at right now.
Okay, I'm gonna lay out 2 different stories. They're sort of at 2 ends of the spectrum. One of them is early stage exploration. The other one is a development story, which means they basically have a resource already that they're trying to grow. They're also 2 different metals. I'll start with Vendetta Mining, Victor Thomas on the Venture Exchange. They have about a 5 million ton resource in Australia. They're in the center of the world's largest lead zinc mining camp. They just put out metallurgy. The metallurgy was quite good. They will put out a resource update probably in about a month. I expect that to come in at 7 or 8 million tons. I know the management very well. I've known them a very long time. I'm very comfortable with CEO Peter Voulgaris, who's an Aussie geologist. He's laid out precisely how he intends to expand the resource to the 12 to 15 million ton range. I'm pretty comfortable that he's going to be able to do this, and at that size, that would allow them to model a deposit that's going to generate about 1 million tons a year in production and produce lead zinc. The reason why I picked the stock is that I'm probably more comfortable about zinc than any other metal. It's in supply deficit. There's no obvious solution to that in the near term. Zinc's gone from about 70 cents to about $1.20 a pound right now. I think there's a fairly high probability it's going to see $2 in the next 12 months. And I was looking for something that could take advantage of this cycle. And by that I mean a company could take this over, get it in production, and capture some of this price increase we're going to see over the next 2 years. It's one of the few opportunities, their Pegmont project, to do that. And I think if they can get this thing to 10 or 12 million tons and put out a PEA, which they may be able to get done all this year, I don't think it sticks around very long. I think there's a high probability the company's gone within 12 months.
You've had great luck with that approach, by the way. People may not be familiar with that. You targeted a lot of winners last year and the year before in looking at these things that could be potentially taken over. So it's an interesting play. When you look at that, obviously we're talking about a speculation at this point, as you say. It's early stages, but it's a fascinating approach. It just gets me, I don't want to run out of time, so give me the other one first.
The other one is a company called Adamera Minerals. Apple, David, Zeta, so ADZ on the Venture Exchange. This one's at the other end of the spectrum, and again, I know the guy that runs it quite well. Very respected geologist. The guy. I have a lot of respect for Mark because he made a lot of sacrifices to hold his company together. And what he's got, he's built a very large land position in the Republic camp, which is in northeast Washington. This is a gold explorer. Republic has produced about 6 million ounces of high grade. It's high grade, highly profitable operations. The last one ran out of ore about a month ago. Kinross owned it. Kinross still owns the mill there. And there's sort of a two-pronged approach here. When he started, he was looking for, his thesis was, I can find a relatively small deposit, and Kinross is almost certain to buy it because they desperately need feed for their mill, and they are literally out of feed now. But as he's expanded his exploration profile, in this new bull market and started doing broader surveys that no one had ever done before. He's spinning out targets pretty much weekly right now, and in about a month and a half, when the snow's gone, he will start drilling these targets. And I like this project a lot because I like the thinking he's done and the targeting he's done. And in fact, a lot of these new targets he's generated have much larger scale potential than was initially expected. So his thinking has gone from, I'm looking for something small to feed the mill, to I'm looking for something big that could be standalone. It's highly speculative. He hasn't drilled yet. But to me, my gut feel on this one, and I've been right about a few of these in the past year and a half, this is a story that I think the market's going to latch onto, and that gives my readers a chance to do something I always try to do. In these early stories, you want to get ahead of the market. You want to be buying it before the market figures out that it's something that's got big potential. Once the market catches on to that, it's quite common in a bull market to see fairly significant price runs before the drilling even starts. If you're an early adopter, you use that price run to your advantage. So say you buy it at 10 cents and the stock runs to a quarter when the drill starts turning. You sell some of your stock. You bring your average cost down to 5 cents or 2 cents or nothing, and you've got a free ride on a drill spec, which is exactly where you want to be in the exploration business if you can do it.
And it's fascinating. I think that's why Hard Rock Advisory is so popular, because I mean that you need you need to have a real insider's understanding of that business, which of course after all these years you certainly do and your team does. But it's a fascinating side of the business. As you say, you start with management and you kind of look from there. Now, Eric, thank you so much for finding time for us. And I'll remind people that if you go to moneytalks.net, for $7, you can get the 3-month subscription to HRA, Hard Rock Advisory, or you can go to their website for more information. Go to hraadvisory.com. Eric Coffin, my guest, great stuff. As I say, very interesting. If you're in the speculative side of things, you can make it exploration.